You know, for the longest time, investing has had its superstars stocks, bonds, gold. But what if there's a new challenger in the ring? Today, we're diving into an analysis that pits Bitcoin against these very giants of the financial world. Let's get right into it.
So this really is the big question, isn't it? Is Bitcoin actually better than the stuff we've trusted for decades? Gold, stocks, and bonds. I mean, really, we're going to break down the arguments and see what the analysis says. All right, first up, it's a real clash of the titans. In one corner, you've got gold, the heavyweight champion of storing value for, well, centuries, and in the other, the digital upstart Bitcoin. Let's see how they stack up. Okay, this is where it gets really interesting. Yeah, gold is scarce, we all know that. But Bitcoin's scarcity, it's on a whole other level. It's verifiably scarce. There's a hard cap of 21 million coins, period. That's it. And then think about just moving it. You want to move gold? Good luck. You need guards, trucks, vaults. Bitcoin, you can send it across the globe in minutes from your phone. And how do you know it's real? With Bitcoin's blockchain, it's verified instantly. Try doing that with a gold bar without some serious equipment.
So, what's the verdict here? Well, the analysis pretty much says Bitcoin isn't just trying to be gold, it's trying to be a better version of it. Think about it. It takes the core idea of gold, that scarcity, that value, and supercharges it for the digital age. It's easier to move, easier to divide up, and way easier to secure. That's exactly why people started calling it digital gold.
Okay, so Bitcoin versus gold. Check. Now, let's switch gears and see how it fares against the absolute cornerstones of the financial world. Stocks and bonds.
You know, the biggest difference here is what you're actually buying. With a stock, you're buying a piece of a company. You're counting on a CEO, a board, a whole corporate structure. If that company messes up or goes bankrupt, poof, your money can vanish. But Bitcoin, it's not a company. It's a network. There's no CEO to fire, no headquarters to shut down. It's decentralized, which means there's no single weak spot. That's a completely different kind of risk, right?
And when you look at performance, wow, this chart really says it all. I mean, stocks have done pretty well over the past decade for sure, but Bitcoin's growth has just been explosive in comparison. Now, let's be super clear. That ride has been a wild one, with massive ups and downs. We're talking serious volatility. But you just can't ignore that huge difference in returns. It's a big reason this conversation is even happening. Then you have bonds, everyone's favorite safe investment. But here's the catch. In a high inflation environment, those tiny returns might not even keep up. So you're playing it safe, but your money is actually losing purchasing power. Bitcoin is basically the exact opposite. Yes, it's volatile, no doubt about it, but its entire design, that built-in scarcity, is geared toward potential long-term growth.
And that brings us to maybe the biggest argument you hear for Bitcoin these days, its role as a hedge against inflation. I mean, can it really protect your wealth when the cost of everything is going up? Let's dig in and see.
This quote really nails it. Inflation is that quiet thing that just eats away at your savings. The dollar you have today just won't buy as much tomorrow. So an inflation hedge is simply an investment that's meant to shield you from that, to keep your money's value intact.
And if you want to see what that eating away looks like in the real world, check this out. According to this analysis, the US dollar has lost over 90% of its purchasing power since 1950. Think about that for a second. That's staggering. It's a huge deal for anyone trying to save for the future.
Right, so to put it simply, an inflation hedge is just something you own that's supposed to hold its value, or even better, go up in value, when your regular cash is buying less and less.
And this is where Bitcoin's killer feature comes in. Its supply is fixed. It's written in the code. Nobody, no government, no bank can just decide to create more of it. And that's the whole ballgame right there. Since you can't just print more Bitcoin to devalue it, it has this built-in defense against the very thing that causes inflation in fiat currencies.
Okay, so Bitcoin has all these unique properties. But what does that mean for an actual investment portfolio? How do you use it? Well, the analysis is pretty clear on this. It's not about going all in. It's about finding a smart, balanced role for it. And the suggestion is actually pretty straightforward. Don't think of Bitcoin as a replacement for everything else you own. Think of it as a booster, a complement. The idea is to add just a small slice, say 1 to 5% to your portfolio. That way you get a taste of that massive growth potential without taking on a terrifying amount of risk from the volatility. And this is what that looks like visually. You see, the vast majority of your portfolio is still in your traditional assets, but you've carved out this small piece for Bitcoin. It's all about getting that exposure to something new and potentially powerful, without, betting the entire farm on it.
So where does this all go from here? The analysis lays out a pretty clear path for adoption. It started with the real early believers and then regular retail investors like you and me. Now we're seeing big investment funds get in on the action. But the next and maybe final step, that's the huge institutional players. We're talking pension funds. If they start allocating, that's a whole different level of mainstream.
So I think the big takeaway here is that the conversation is really shifted. Bitcoin isn't just this rebellious outsider anymore, trying to flip the whole table over. It's actually being invited to sit at the table. It's becoming a legitimate part of the discussion for any modern diversified portfolio.
And that really leaves us with a huge question to think about. As Bitcoin settles in and becomes a more standard part of the investment world, how is that going to reshape everything? How will it change our ideas about money, about risk, and what it even means to invest? The answer to that is still unfolding, and it could genuinely change the financial world as we know it. Thanks for tuning in.